In 2008, you were told the bailout to save the world cost $700 billion. That was a lie. The real number was $16 trillion, and for 3 years they kept it a complete secret. What you just heard isn't a conspiracy theory. It's a fact, buried in thousands of pages of government documents that the Federal Reserve fought tooth and nail to keep hidden from the public. While you were debating the pros and cons of a $700 billion plan called TARP, a secret parallel bailout was happening in the shadows, one that was 23 times larger. This hidden rescue operation didn't just go to American banks. It went to foreign banks, corporations, and billionaires around the globe. It was a lifeline for the very people who torched the global economy, and it was engineered by their friends inside the most powerful financial institution on Earth. In this video, we're pulling back the curtain. We're going to show you the undeniable proof, name the banks that got the money, and explain the corrupt mechanics of how they pulled off the biggest financial heist in modern history. And most importantly, we'll show you why this story from over a decade ago is more important than ever today. To understand the lie, you have to remember the fear. Cast your mind back to the fall of 2008. There was a chill in the air, and it wasn't just the coming winter. It felt like the floor had just dropped out from under the world. Lehman Brothers, a 158-year-old titan of Wall Street, had vanished overnight. It evaporated. The credit markets, the arteries of the global economy, were frozen solid. Banks refused to lend to anyone, even each other. The prevailing feeling wasn't just recession, it was collapse. The kind of thing you read about in history books about 1929. And then the government stepped onto the stage. President George Bush and his Treasury Secretary, a guy named Hank Paulson, the former CEO of Goldman Sachs, remember that name? They looked the American people in the eye and said they had a plan. It was called TARP, the Troubled Asset Relief Program. The price tag? A staggering $700 billion. The public reaction was instant and visceral. Tea Party protests erupted on the right. Occupy Wall Street would soon rise on the left. Everyone was furious. $700 billion of taxpayer money to bail out the fat cats who caused the mess? It was a tough pill to swallow. That number, $700 billion, was burned into our collective consciousness. It dominated the news for months. It was the entire story. The public fight, the moral outrage, the political drama, it all revolved around that single number. But that's exactly what they wanted. While we were all looking at the magician's right hand, the real trick was happening somewhere else entirely. The truth didn't come from a government whistleblower or a leak to a newspaper. It came because one news organization, Bloomberg, smelled a rat. They started asking the Federal Reserve a very simple question. You're the central bank. You have the power to create money out of thin air to lend to banks. During the worst financial crisis in 80 years, who did you lend money to and how much? The Fed's answer was basically, that's none of your business. They claimed that revealing the recipients would create a stigma and undermine the fragile recovery. They were stonewalling. But Bloomberg didn't back down. They filed a Freedom of Information Act request. The Fed denied it. So in 2008, Bloomberg sued the Federal Reserve. It was a legal battle that went on for nearly 3 years, a true David versus Goliath fight against an institution with unlimited resources that operates in near total secrecy. Finally, in 2011, after court orders and immense pressure, the Fed was forced to open its secret ledgers. And the numbers that came out were breathtaking. This wasn't just Bloomberg's interpretation. The numbers were later confirmed in a little-noticed audit by the Government Accountability Office, the GAO, report number GAO 11696. It's all there in black and white. The Federal Reserve had committed in total over $16 trillion in secret loans to the global financial system between 2007 and 2010. To put that in perspective, the entire economic output of the United States, our GDP, in 2008 was only $14.7 trillion. The Fed secretly loaned out more money than the entire U.S. economy produces in a year. So, where did this mountain of cash go? The Fed's own data paints a sickening picture. It was a who's who of the financial institutions that had gambled away our future. Citigroup, the bank that was functionally insolvent, was the biggest beneficiary. They received $2.5 trillion in cumulative loans. Morgan Stanley, right behind them at $2 trillion. Merrill Lynch got $1.9 trillion. Bank of America, $1.3 trillion. Even Goldman Sachs, Hank Paulson's old firm, which publicly claimed it didn't need a bailout, secretly took $814 billion. But here's the part that they really didn't want you to know. This wasn't just about saving American banks. This was a global bailout, funded on the back of the US dollar, with zero public oversight. The Royal Bank of Scotland and Barclays in the UK, they got over $1 trillion combined. UBS in Switzerland, $287 billion. Deutsche Bank in Germany, a primary peddler of toxic mortgage debt, a cool $354 billion. This was the global financial elite saving themselves in secret, while the rest of the world burned. Now you might be thinking, okay, they were loans, they were paid back. What's the big deal? That's the official line, but it's a massive oversimplification. This is where it goes from a bailout to a straight-up heist. First, the interest rate. The Fed lent out this money at absurdly low rates, sometimes as low as 0.01%. Practically free money. For context, you were lucky to get a 6% mortgage at the time. This gave the banks a license to print money in what's called a carry trade. They'd borrow from the Fed at nearly 0%, turn around and buy U.S. Treasury bonds paying 3%. It was a guaranteed risk-free profit, courtesy of the central bank. But the real scam, the absolute heart of the fraud, was the collateral. When you get a loan, you have to put up collateral. If you don't pay, the lender takes your house or your car. In this case, the banks gave the Fed their collateral. And what was it? It was the very same toxic garbage that caused the crisis in the first place. Worthless mortgage-backed securities, bundles of bad loans that nobody else in the world would touch. They were worth maybe 20 or 30 cents on the dollar, if that. But the Federal Reserve accepted this trash at 100% of its face value. They swapped it for brand new, clean cash. It was the greatest magic trick in financial history, turning garbage into gold. They didn't just give the banks a loan, they took all their bad bets off their books and replaced them with risk-free money. It was the world's largest, legally sanctioned money laundering scheme. And while Wall Street was being showered with secret trillions, what was happening on Main Street? What did ordinary Americans get? They got foreclosure notices. In 2010 alone, a record 3.8 million American families faced foreclosure. The government rolled out programs with names like HAMP, the Home Affordable Modification Program, promising to help homeowners. It was a cruel joke. The program was a bureaucratic nightmare that ultimately helped only a tiny fraction of the people it was meant to. Meanwhile, what were the banks doing with all their new free money? They were paying themselves. In 2008, the same year they nearly destroyed the world and got a secret multi-trillion-dollar rescue, Wall Street banks paid out $18.4 billion in bonuses. They took taxpayer-guaranteed money given to them in secret and used it to reward themselves for a job catastrophically done. It wasn't just a policy failure, it was a profound moral betrayal. The system was designed to absorb the profits for a tiny few and socialize the losses for everyone else. And it worked perfectly. So you have to ask yourself, how could this happen? How could a $16 trillion decision be made with no public debate, no congressional vote, and be kept secret for 3 years? It wasn't an accident, it was a choice. Look at the people in the room where it happened. Fed Chairman Ben Bernanke, Treasury Secretary Tim Geithner, former president of the New York Fed, and of course, Hank Paulson, former CEO of Goldman Sachs. The regulators were the very people they were supposed to be regulating. It was the ultimate inside job. The fox wasn't just guarding the henhouse, he had designed it, built it, and held all the keys. The $700 billion TARP fight you saw on TV, that was the public distraction. It was the political theater necessary to make it look like something was being done, to make it seem like there was accountability. But the real game, the game that mattered, was the $16 trillion they were orchestrating in the dark, far from the prying eyes of the public. And here's the truly terrifying part. Nothing has fundamentally changed. The too big to fail banks of 2008 are even bigger today. The top 5 U.S. banks now hold more assets than they did before the crisis. And they have a new tool, a new mechanism for the next time things go south, written into the Dodd-Frank Act. It's a sanitized clinical term called a bail-in. It means that in the next crisis, the government might not just use taxpayer money to save the banks. They might authorize the banks to take the money directly from their creditors to recapitalize themselves. And you know who a bank's biggest unsecured creditor is? It's you, the depositor, the money in your bank account. Next time, they might not be coming for the taxpayer. They might be coming for your savings. The story of 2008 isn't just history, it's a blueprint. It's a playbook for how the system protects itself at your expense. They sold you a story about a $700 billion problem when the reality was a $16 trillion secret. They got away with it because it was complex, because it was hidden, and because they counted on you not paying attention. The same forces, the same people, and the same fundamental corruption are still in place, waiting for the next tremor in the system. The only real defense you have is knowledge, understanding how the game is played. They lied to you then, and they are prepared to lie to you again. The one thing they can't control is you knowing the truth. If you want to understand what's really happening in our financial system before it's too late, subscribe to this channel.